Hey everyone, welcome back to the Real Wealth Mindset, your go-to source for smart money moves and global market insight. Today we are diving into something hot of the economic press, the new US tariff. The new US tariff. How they are shaking up the world economy and most importantly, how you can position your investment for maximum benefit. You don't want to miss this one. Let's go. So first of all, let's look at tariff and global economy. All right. So what's going on with the new US tariff? The US government is rolling out fresh tariff on strategic imports like EV batteries, green tech, and high tech companies. The companies that are bringing in some components, technology related or electronic vehicle battery related. Mostly they are aiming to reduce dependence on rival economies and boosting domestic manufacturing. That is the idea. That is what is paint on the picture for people to see. Now, tariff does not just stay local. They send shock waves across the global economy. You will see price increases, supply chain shift, and even retaliation from other countries. That means we are entering a whole new phase of economic imbalance or economic realignment. All right, let's look at the investment opportunity for you, for I, and for everybody else. But here's the twist. Smart investors can benefit from these changes. Let me break it down into 5 winning strategies you can start thinking about today. Strategy number 1 is diversify. Volatility is rising in certain sectors. A lot of sectors, based on this shift, and based on this tariff, there's a bunch and load of volatility that we surface, especially ones relying heavily on global import and exportation. As a matter of fact, a diversified portfolio protects you. So if you want to diversify, you have to diversify based on some of the type of technology that the tariff is affecting or is impacting. It's either you move your diversification or your money into somewhere else, a different sector or a different industry. That could be a way for you to diversify your portfolio. You have to think broader, not just stocks, but bonds, commodities, and even crypto for some edge players. Number 2, bet on reshoring and domestic growth. Tariffs are giving American manufacturing a shot in the end. Again, it means the local companies may benefit from this tariff. Companies that involve in infrastructure, robotic, and supply chain technology, they are heating up, which means the ETFs of America can become the boom. ETFs focus on USA industrials companies. This could be strong long-term play, which means ETFs is a great opportunity for you to diversify your portfolio and get into the business of getting more ETFs into your portfolios. Number 3 is inflation hedge are back in business. With tariff driven up imports and impacts cost. Inflation not going away quietly. So look into real assets such as real estate, gold. TIPS. TIPS is a treasury inflation protection security. This could help maintain your purchasing power. Let's look at number 4. Eyes on emerging markets. This is very critical. With this new tariff issue, there's going to be a new emerging market that will spring up. Guess who is winning from this global supply chain shift? Countries like Vietnam, India, and Mexico. They are becoming the new global factories. So emerging markets focused fund or companies expanding in this region are worth a closer look. If you see a company that moved to India, Vietnam, or Mexico, that is a good opportunity to invest in them. Let's look at number 5. Active management equals to tactical advantage. You have to have a very huge amount of managing your portfolio and looking into your opportunities more closely. In a market this uncertainty, which means in a market where we have this uncertainty, active fund managers are earning their keep. Look for funds that are able to pivot when economic data shift. So funds that regardless they can still pivot even when there is a shift in the economy, which has to do with passive investing might be the key for you. Passive income might be the shit for you. Passive investing might not cut it in this environment, but in the long run, the passive investment might be the cut for you in the long run. Let's look at section 3, which is financial outlook and final thoughts. So, what's the financial outlook from here? We are looking at a world that is adjusting very fast through inflation pressure, technology innovation, trade realignment or rebalancing. The smart move is to stay informed, stay flexible as well, and think globally. And remember, volatility isn't always a threat. It's often an opportunity in disguise. The right investment strategy does not just protect your wealth, it grows it. All right. If you got value out of this episode, smash that like button. Drop a comment with your investment thoughts. And of course, subscribe for more insight that keep your head off the curve. Want a deep dive into emerging markets or a breakdown of sectors play? Let me know below. Put your comment below. Ask your questions below. Remember to press the notification button so that you can get notified whenever we post a new video. Thank you for watching and have a good day.